Welcome to the Infinite Energy Podcast. Today with us is Fernando Melo. He is the Federal Director of Policy and Government Affairs at CanREA. As always with you, Alexander Wolf and myself, we're the CEOs at Frankensolar Americas. And really excited to have you on today, Fernando.
Welcome.
Thanks very much for having me, guys. I'm really excited to be here. Looking forward to having a great discussion on clean tech investment tax credits.
Yeah, I think it's a topic that a lot of people are really interested in. Obviously, it's been a long time coming. I think it's as long as I've been in the industry, people have wanted an ITC. So really excited to have that. To get started, Fernando, can you give our listeners a quick overview of who CanREA is and what your mission is and what you guys do?
Awesome. So CanREA, also known as the Canadian Renewable Energy Association, we're the industry association and voice for Canada's wind, solar, and energy storage industries. We work in almost every province and territory, doing advocacy at a provincial level. And myself, I work at a federal level, trying to sort of bring across a lot of items. And we as an organization have been pushing for the ITCs, I think, long before the U.S. Inflation Reduction Act, but we really kicked it into high gear as soon as that was brought
in. Can you give us a quick overview of your role within CanREA?
Of course. So I am the federal director for policy and government affairs. So my job is largely to work with members like yourselves to develop policy and responses to what's going on at the federal level, to engage with politicians from all stripes and colors, as well as the bureaucracy, to sort of educate them on the issues that face our industry, as well as to work with them to develop clear solutions that really do work. I mean, the ITCs are a big part of that. We also work on a variety of trade files. Again, Danny, we've had quite a bit of work together on that one, on those elements, and we do. So for me, I wear multiple hats, and for those of you who ever have to deal with wildlife issues, I also manage all the wildlife issues for CanREA across the country.
Oh, wow. Okay, cool.
Perfect. Maybe for the listeners that are maybe part of CanREA already, but maybe some companies want to be part of CanREA, maybe give us an overview. What value is CanREA adding to the solar installer or a solar company?
I mean, for solar installers and things like that, I mean, the first and easiest one is you can look at places like the city of Edmonton just rolled out a program to incentivize that, and so did the province of British Columbia. And actually, we've worked with both those governments to make sure that our member list is searchable for folks looking to access those rebates. And so at the most very basic level, it's a lot of that exposure and an easy to search. But we also sort of have a advocacy angle where we have people come to meetings regularly, work with folks like myself across the country on various issues. And we actually have a whole behind the meter caucus that is network now, I should apologize. We do that really is focused on issues of behind the meter. And lastly, I think one of the best things that's coming forward is I'm actually in the process of setting up a free to our member webinar with the Canada Revenue Agency on the investment tax credits and making sure that we're able to maximize sales flow for folks installing as well as selling these systems to commercial developers. And so that you can really ensure that no one's getting dinged by everyone's favorite auditing agency and filing taxes. So that's something we're setting up. It's early September. We're just finalizing a date. So please stay tuned to CanREA's e-blast for our members. And for those interested in it, feel free to reach out. We definitely can talk about how those sort of get set up.
Awesome. Now to the topic that, of course, everyone came to learn about today. And I was wondering, like, how did the ITC for clean tech become a thing? Like, what were the steps? When did this start, etc.?
So, as I mentioned off the top, CanREA and our sort of sister organizations across there have been advocating for an investment tax credit for a long time. to really help folks really make that investment. For a while, we had that capital cost allowance program. We still have it. It is getting phased down, but that's a little bit of a later topic. But really what happened was the federal government wanted to respond to the U.S. Inflation Reduction Act, because you had folks like us go to the federal government and say, hey, you hear that sucking sound? That's capital flowing to the United States, because they developed some powerful incentives that are really going to push development in the U.S. And so it's taken a long time, unfortunately, about 2 years, 2 years, or what sometimes feels like a decade. But we've arrived at it. Got some strong legislation, and the federal government has now issued quite a bit of guidance on what's called the Clean Technology Investment Tax Credit. There is another investment tax credit coming in the fall. Legislation is expected to be tabled sometime in October, called the Clean Electricity Investment Tax Credit. They're very confusingly named. No one asked us for a better name, but that's okay. But what that one is for your not-for-profit sort of groups, your hospitals and other entities. But the long and the short of it is, we've been pushing them to ensure that Canada's solar industry and other parts of our broader renewable industry and energy storage industries can stay viable, because it's harder for you guys on the call to actually get access to capital to build these, or have that deal flow. If a commercial developer kind of wants to go invest somewhere else, or make that return on investment easier.
Awesome. Can you tell us a little bit how CanREA contributed, and like the talks you guys had with the government?
I mean, we were there from the get-go. The minute the Inflation Reduction Act was passed, we were sending letters into the Minister of Finance or Deputy Prime Minister. We were having a flurry of meetings with members of Parliament, senior bureaucrats in Finance Canada, as well as Natural Resources Canada, and all over the federal government. And we have been pushing. One of the things I joke, I started the job here running by immediately going to meetings with a number of folks from the federal government and helping design the legislation itself as it goes forward. One of the key wins that we can definitely say we got is the inclusion of real estate trusts within the legislation. When they were initially proposed as Finance Canada left out real estate trusts and other forms of trusts, which own 1 in 5 buildings in Canada. And we said, hold on, that's just not allowable. And we also got an inclusion of equipment that's then being leased to different owners within it, because I know for a lot of you folks, that might actually be part of your viable business options. So we've been really at the table working with Finance Canada on that one. And then once legislation was put in place, I think I testified 3 times on this, and our CEO, Vittoria Bellissimo, testified once before Parliament, again, encouraging the pass, encouraging some small tweaks that are going forward. And we've been at the table ever since on the Clean Electricity Investment Tax Credit to make sure that we can close it off and ensure that a lot of Canadian institutions and your potential customers for you guys have access to that investment tax credit, so they can make final investment decision, and that the commercial stuff really makes sense.
Absolutely. The ITC is a very wide program for a lot of technologies. We're in the solar industry, so what are the advantages you would focus on for the solar industry, what the ITC can bring to the table?
I mean, the clearest example I have is it makes that business case to your customers a lot easier. You're able to say, hey, you get a cash refund of between 20 and 30% based on a couple of factors we can get into later, in your tax filing. And for them, that is a cash basis now. And it is something that we're seeing on a larger scale, folks getting bridge loans for, and there's a lot of financial solutions evolving in that one. But unlike in the US, where you have production tax credits and things like that, and they're not actual cash in hand, for your deal flow and for you to actually go out there and close those sales, it's a lot easier to say to, I'll give an example. My dad runs a carpet store. Say to someone like my dad saying, hey, you're actually going to get between 20 and 30% of what you spend back on that. So it's great to see how that will evolve and make that sale easier. There are other ITCs about, helping people build production here, but that's a little bit of a different topic.
Perfect. Talking a little bit about what qualifies, right? I mean, it has to be a business, I believe, that owns it, right? But
yes,
what kind of projects will, like solar projects or renewable energy projects, will qualify under the ITC?
So until we get the clean electricity ITC passed, the only things that really count are projects that are for a tax-paying entity in Canada. Those are kind of it. So unfortunately, private individuals don't count. So me putting solar on my roof, not going to count. But a lot of your commercial buildings, so warehouses, a lot of folks, heck, IKEA is actually looking at quite a few projects to take advantage. But any of those large commercial projects or even smaller commercials will really benefit from this investment tax credit. And entities like that are really who you want to target that's in terms of a sales item. But
I guess where I kind of was going with it, Fernando, was so can you do ground mount? Can you do carports? Can you do storage? Are there any limitations?
So there aren't a lot of limitations. The investment tax credits, essentially, it covers all of the equipment that you need to get either to the grid or to end use. Anything that's behind the meter. The building envelope obviously doesn't count, but you can even include your racking items and other parts of your sales flow. Natural Resources Canada has a really good guide on what's in and what's out. But yes, battery storage, that's included. If you want to include that, your inverters, those are there. Like any sort of auxiliary generator, that's not included. But your system controls, your transmission equipment up to grid connection is included. Obviously, it does a lot of this. We're pushing for the clean electricity tax credit to get that distribution, essentially your two-way lines. Obviously not technical term, but your two-way line. We're trying to get that included, but in a future ITC. But that's a TBD. But there is a lot included within that system, and yes, you can sell a whole power management system with it and get that included.
And are there any size limitations or minimum investment or maximum investment?
Absolutely none. That's the best part about these investment tax credits is you can sell a system for a few $1,000s or a few million, or hey, if you can really do it, $1 billion, a few billion. There is no size limit, and that's going to be very interesting to see how this shakes out.
A lot of solar companies are challenged or maybe don't understand the full application process because paperwork is always a challenging part. We know that from the Ontario part, where feed-in tariff was a very, very paper-based and long wait times and very complicated. A lot of people just didn't understand the process. Can you walk us through the general process, how to approach with your customer, the ITC, and what steps are involved to get a successful project underway?
So one of the great things that's happened is that, again, the Canada Revenue Agency, by working through CanREA, we've actually helped develop a really great walkthrough on the Canadian Revenue Agency's website. So I'll definitely have that something you can check out. Always look it up. It's the Clean Technology Investment Tax Credit plus CRA. Google that, you should get it. But the easiest thing is they're filing on their T2. And it becomes a really easy sort of step-by-step process. Everyone's got an accountant, hopefully. And it's going to be part of your T2 process. They are in the middle of revamping a lot of those forms right now. And again, that's something I think later this week we're going in to sort of sit down with our accounting side of things and their folks, sort of get a suss out. But the really great stuff is that's a lot less complicated than the FIT program, which, yes, I do remember how annoying and difficult those paperwork are. That was how I started
especially
my career.
FIT 2.0. That was crazy.
That was a lot. And we are not dealing with something like the Greener Homes Grant, which also had some very prohibitively difficult paperwork. Speaking as someone who's just finished up one. So this is where the advantage of these investment tax credits is part of your sales item is it is already a line on your T2. And it is something your customers are going to be relatively familiar to filing with.
In the sales process of selling a solar system on a roof of a manufacturing building, for example, would it be advantageous for the customer to already get their accountant into the equation very early on at the sales step? Or is that something where the system can be sold, you have the final invoice, it will be submitted with your taxes, and then after the fact, your accountant will come into the equation? Or what would be your recommendation for business customers that are thinking about putting solar on the roof?
In terms of that, I would say your sales, so that sales flow, getting the accountant involved about midway will be helpful, mostly because they'll be able to recognize, hey, this has got cash value. And generally having the accountant being happy with you for a process like that always helps with sales, I've found. But that's, again, personal. So for me, I think it's midway. You don't want to get them involved straight away, but you want them to understand that there is actually a cash basis there and having them a little bit familiar with the process so that you can get that sort of deal done.
Perfect. You were hinting earlier about the 20 versus 30%. I think a lot of that comes down to prevailing wage. What can you tell us a little bit about how that became a thing? And also, what can you tell us about prevailing wages in general?
So the prevailing wage became kind of a thing based on the federal government looking at the U.S. Inflation Reduction Act and saying, hey, they've got a requirement right there on it. But then hearing from industry associations saying, yes, we support folks making a good wage, but we can't compel union participation. We've got no problem unionized or not unionized, but we know that is a different choice that we didn't feel was appropriate for the government to make. So we just said, you can put in place something called a prevailing wage. Now, they do look at it, and they look essentially what it is at agreements within different provinces between large labor unions and other groups. And there is, again, on the CRA's website, a step-by-step guide on how to follow these items, sort of pieces. There is also now, thanks to a lot of advocacy, again, from CanREA and a couple of other industry associations who are involved more on the clean technology side, so think your HVAC systems and things like that, to have a no-fault element. So everyone on this piece could be really doing their best to meet those prevailing wages, but oh, geez Louise, somebody else over there got a better agreement and it's not governing. We are still pushing for changes to that so that the federal government would just sort of publish a total value of what a prevailing wage is for a province. That way it makes it a lot easier when you're calculating. Another thing you can do is elect simply not to go forward with the 20%, the 30%, and just say, I'm going to take the 20%. I don't want to have to worry about the extra paperwork. I don't want to have to worry about that justification or the audit side of things. And just go forward with that. So that's, I mean, that's your own business decision and how you move forward on it. But the process itself on prevailing wage has gotten a lot more transparent since it was first proposed, mostly by the government looking south and going, we should do that. Whereas in the United States, they've had something like this since 1934. Here, it's a 2024 invention.
Is CanREA planning on publishing any wages, or is that something that you guys can offer?
It is something we're debating and looking at. The only caution we have with it as an industry association is we don't want, yes, we represent the overwhelming majority of the industry, but we also are a little worried about, again, some liability but we would rather have the federal government be the ones to provide that. So it's ease of access to everyone, and there is one central repository for that guidance. That way, hey, if down the line they issue a little bit of updated guidance, we can ensure that you are in the right place. We are looking at actually publishing on our members website sort of some how-tos and clear guidance. I know some of you who are members have already seen some notes comparing the variety of different technology claims come out from myself. So that is something we are exploring. But yes, I don't know if we're going to be, hey, here's your prevailing wage table and the update.
What documentation requirements does the program have specifically when we're talking about prevailing wage? What should a solar installer keep on the record for a future audit that may come, or how can people prepare to be ready for?
I think your best bet is ensure your employment agreements are up to date. And if you're having subcontractors come in, as many of you do, make sure that you do have a little piece of legal paper or documentation that is an attestation. So that's your subcontractor can sign and say, I agree that I am going to pay the prevailing wage as set out in the Income Tax Act subsection blank. I'll be honest, I can't recall the exact subsection. But again, the Clean Technology Investment Tax Credit website on the Canada Revenue Agency does have that detailed information. And your best bet to have that on site is your employment contracts, those attestations from any subcontractors, and the dates things were installed and done. So you can look back and reference those pieces as provided by the CRA.
Are there any other documentation requirements besides the labor component and the final invoice, of course, for the total amount that someone should keep track of it?
Not really in terms of that. I mean, definitely, and that's the real advantage of these investment tax credits. You're going to need to, keep track of all these like you would all tax documents. And you need to determine, your whoever you're selling to's eligibility, because there is, obviously the question of, is this housing co-op for profit or not profit? Or is this, and I'm using housing co-op loosely, that may not be the correct answer. And you want to, again, consult with the CRA on that one, but, making sure that you're having the right entity listed and things like that. Again, that onus is technically on the tax filer themselves, but as the folks who are installing it, definitely just keep as much documentation as possible. As annoying as it is, it's better having the documentation than a bad audit.
100%. Can you give some examples of similar type of programs that either in this country and other countries that have been out there, and what kind of effect it had on specific industries?
So this is the really neat part, is there isn't a ton of analogous programs out there. The U.S. Inflation Reduction Act did create an investment tax credit for solar, and it has really incentivized a lot of development and deployment in the U.S. and push forward. But the interesting thing is, theirs is not a cash refundable program. So those investment tax credits, you can go around and monetize them by selling them to someone else or another taxpayer. But there's nowhere else that I'm aware of. I mean, there might be someone on this thing say, hold on. But Paraguay, I can't say I've done the full landscape of the 180 plus countries we have in the world. But to my knowledge, there isn't any that is a direct cash refund. The US, like I said, most analogous, and that's gone gangbusters. But now imagine the fact that we actually have cash refundability instead of having to go back and do a secondary monetization on a deal and do more work through, tax credit traders and other sort of secondary bodies.
What is your expectation? How will the ITC influence the market in size? So are there any specific growth numbers CanREA
we're
is
still
expecting
working
on the
on
solar industry, or
those.
what can we expect?
We're working on those growth numbers and trying to figure that out so we're very early days on trying to sort of bring that on, but the Parliamentary Budget Officer just actually released a report on sort of what they're thinking. They didn't get very granular, but they said, we expect this program to impact the public purse a lot more than the government is saying. So it's quite clear they're anticipating this to be a very popular program from a launch point. But we are at CanREA looking at creating our own assessment and forecast on how this is going to impact it. But as I said, it's early days as we really want to get final details on the clean electricity investment tax credit, because there is an entire half of the solar section, solar industry, that is being left out if you're looking at non-taxable entities, because Indigenous groups can't claim this. Neither can any of your non-taxable entities like municipalities or whatnot, who do have a lot of play in this sector.
Well, we look forward to getting some good reports from CanREA. I think it's always been something that the industry has been hoping to get. I know you guys have been reporting solar numbers and how much has been installed, but obviously it's been very difficult for CanREA or anyone else that wanted to get a clear picture of how much solar is actually being installed in Canada. So do you expect this to actually help with giving us clear numbers?
We're hoping that the reporting element of this is going to really help. We are in the middle of rehashing our entire data team. So a lot of our reports will get better, and we are really investing in that as an organization. And we're hoping to pull from the Canada Revenue Agency's reporting on solar installations, as well as this tax filing. That is something we are asking the federal government to really report back and be able to have that data, so we can really forecast future numbers and get a bit better.
Yeah. So what do you see the long-term outlook for the ITC or Clean Tech ITC, and how do you see it evolving over time?
So a couple things to note on it. One, we do know that it is replacing the Accelerated Capital Cost Allowance program already. So many of you who are involved in sales are very familiar with that program. That is being phased out in favor of the investment tax credit. But you also should know that the investment tax credit does phase out in 2034. So we have a bit of a runway. We've got about a decade here to really see a lot of sales go forward on it. We are hoping that we can see this lengthened or change. We're working, as I said, with multiple parties and hoping maybe to make this more streamlined with any future government, and really take any of the learnings that we have from folks like yourselves when it comes to sales and when it comes to the installation and that experience with the investment tax credit, and work with future governments, regardless of stripe, to improve it over that decade and maybe see it extended.
So you were touching at the depreciation portion that most people are familiar with, right? Where you can write off the asset over 1 year or in the first year if you choose to do so. That it's been the way it's been done in the past. Is that not active anymore as of today, or what's the?
It's still active. Okay. Again, I'm not going to say off the top of my head, but I do know, I believe it is at 75% for this tax year, and that it will be and that the total amount that can be first year depreciated will decrease in time to a point where I believe in the mid to late 2020s, it will not be, there will be no capital cost allowance program for solar elements, and that it all will be moving to the investment tax credit. But in the meantime, they wanted to sort of get things up and running with a little bit of both, so you can sort of phase it in. And I, again, would definitely say, give it a good look in how you model it out for your customers as you bring it forward.
I think that's really important information. And also a great way to get people to commit to building a solar project right away, right? Because they can double dip at this point. So for any solar installers, I think that would be, if I was selling to a business owner, that would be right at the top of the list of getting people to sign on the dotted line by mentioning that.
Maybe just to clarify, it is possible to have the CCA, the capital cost allowance, and the ITC at the same time for this year and next. You mentioned a reduced rate to 75%. So is that possible, or are they mutually exclusive?
It isn't. They are not mutually exclusive. But again, I'm always going to say check with your accountant for your main clarification there. But yes, the intent is that there is some double dipping allowed in the short term. There may be some rules on how they might grind on each other and how that will work. But again, always check with your accountants. But I have not been told by anyone at Finance Canada or the CRA that, nope, double dipping is forbidden. They have made it clear on something, and this is another piece for you, is for folks selling within the Atlantic Canada, you might be familiar with the Atlantic Canada investment tax credit. Now, here's the interesting part. You can actually stack for non-grid servicing projects the 10% Atlantic tax credit and the Clean Tech ITC. So they are fully stackable in so long as the project's not selling to the grid. So that means you could be up to 40% plus the accelerated
CCA,
capital cost allowance.
That's absolutely nuts. Yeah.
So, you know, for that little area, definitely that is going to be a very interesting piece.
That is amazing.
We have a federal election next year. What is your feeling for risk? You mentioned a 2034 timeline. That's a very long time in the political space. With political change in Ottawa, what risk is the solar industry exposed to?
So I won't ever sugarcoat it and say there's no risk. We're fine. We're absolutely good. But I will say this. We have a very open door with all federal parties. I've been working with them very closely. I mean, I think the best example is we had both the parliamentary secretary for Minister of Natural Resources and Environment and Climate Change Canada speak to our board in February. And then right after, we had the Conservative critic come in and speak to our board. Same sort of thing, give those same discussions. The New Democrats, we have had great discussions with them in the bloc as well. There's a general support for the idea of technology, enabling folks to reduce their own emissions, produce their own energy, create resilience, and make those personal choices. And there is a lot of support broadly for enabling businesses to make their own discussions. I can't say, you know, what the changes will be, or hey, if this political party that's, you know, this color comes in, they'll do exactly this because that. But I will say this: there is broad support on all parties in the House of Commons right now for solar and for allowing folks to make those choices for themselves. Now, when it comes to, you know, large commercial projects, that's a bit of a different story, and we have a bit more of a discussion. But when it comes to, we're talking commercial buildings, homes, there's a lot of support. So I think it's one of those ones where I look for it, and this is not the area that keeps me up at night.
That's Perfect. Good to
hear. Before we get to our questions section of the podcast, and if you haven't asked questions yet, use the chat function, ask questions in there. I saw there's a lot that came in already, but I got one more question here. Are there any future policy developments and incentives on the horizon that could further benefit the renewable energy industry?
I think I've mentioned it a few times, but the clean electricity investment tax credit is going to really, as I say, sort of complete the suite of policies here. This is going to, as I said, it's for your non-taxable entities. So it's going to really make it easier. Churches, Indigenous owned properties, municipalities, not-for-profits, co-ops, those sort of groups will allow that to be open. Now, that is a lesser tax credit, but that's because they don't pay taxes, and it's worth 5 to 15%. And interestingly enough, you can sort of you cannot stack it, but just say there is a commercial entity that's partnering with a non-commercial entity, and they form a limited partnership. Well, guess what? One can claim the clean electricity, and the other one can claim the clean technology tax credit and move that forward. But broader than that, I really think there's a big push to look at how we develop the industry here for more domestic content. And we are hoping to see some further development, but from my understanding is the government is really looking at these investment tax credits as the big lift for the next while.
The Greener Homes program has been kind of put on a hold, right? Other than the loan portion, is there anything else coming down the road there?
So in terms of that, they are retooling the Greener Homes program. We're expecting within the next few days some programs on the energy efficiency strategy, which does actually include self-generation. So we're trying to figure that out. And the federal government is working with a lot of provincial utilities and others to sort of administer a second phase, more targeted. And it's going to be up to each sort of administering group. I think of like Efficiency Nova Scotia is the one that's is the one running it in Nova Scotia. It's the one I'm really familiar with in sort of its engagement, because they do actually have a low support program for low income adoption of solar that sort of helps those projects along. And so it's going to be on a province by province basis. It's a little frustrating again, based on that, and trying to demonstrate how important this program was for residential solar installation, even if the paperwork itself was a little difficult. And the Greener Home loan also, again, we're encouraging them to improve the application process so that folks don't necessarily have to have a quote right away, so that they can go into meetings with solar providers and say, yeah, no, I've already got this on the line, instead of having to have a clear quote first before making that application. So something we are working on with them, Natural Resources Canada and Canada Mortgage and Housing Corporation, but we're hoping, but I don't know if we're going to get a return to that really fantastic grant program.
That's fair. It was quite nice, and I think a lot of people are disappointed when it got stopped. Right? I feel like maybe some money, maybe a little bit too much money was given to certain industries, but that's my personal opinion on this. So
I think that's why we've been really excited. So, and again, that's why we're excited about an investment tax credit, because unlike a program which is saying, oh, here's your X amount of money, that pile of money, and this is what happened to the Greener Homes grant, is they ran through that very quickly, because everyone realized, oh, geez, I can get this amount of money as a rebate for a certain system, and solar gets X amount of money in the rebate. And so there's a lot of folks claiming that right away. One of the things we are trying to propose to all parties is a personal investment tax credit for the adoption of solar and energy storage projects along the lines of the investment tax credit that we're seeing commercially. So stay tuned. Obviously, that is very early days. I'm not going to say, yeah, this is happening. I'm saying that is something I bring up in every meeting that we have with all the parties. So
that would be very interesting.
Absolutely, yeah.
Especially for the typical solar customer.
100%. Yeah. Before we get to the questions here, for people that are not CanREA members, how do they get in touch with you guys?
Well, you just go to www.renewablesassociation.ca. We are there, and we are easy to contact you at. We have a fantastic team dedicated to folks asking questions about this. And I'm sure you'd be more than happy to have any of you guys share my email there. But definitely check us out at Renewables Association. online, and we have a great sort of intro. We publish a lot of our pieces there and a lot of great information, folks, even not members, to sort of access and take a look at.
Awesome. Yeah, and from my side and from Frankensolar side, we would definitely encourage everyone that is in the solar industry, any company that is in the solar industry, to become a member at CanREA. I think you guys have done a lot of great work. Definitely seen huge improvements as well versus the old CanREA days. It's a much more professionally run business now, and we're really happy to be a member with you guys. And again, encourage everyone to join. With that,
let's jump into the questions.
Get into the questions. Yeah, Hazine.
So, Cynthia asks, is there any indication that Danielle Smith will try to kibosh the ITCs to further stunt the development of the renewable sector?
I haven't heard of anything on that one. It would be very interesting to hear a premier try and stop a federal tax credit. I can't say anything on that one. I try to stay out of provincial politics. That is far from my realm of area, but I do know that it would be very difficult, as it's the Income Tax Act at a federal level. I know provinces have their own different income tax acts and elements, but I don't know if they can interfere there.
Thank you, Fernando.
Natalie asks, does storage have to include renewables to be included?
No. You actually can see storage on its own as an element there. And again, any of its sort of elements around controls, power control systems, inverters that are needed for that storage. But no, storage is something that you can claim the ITC on independently.
JA asks, if a corporation owns the equipment, can it be installed onto a residential property?
That one is something I would definitely say ask the CRA on. I can't give you that direct answer, unfortunately. Yes, I have definitely floated that to them, and hopefully they'll have an answer for us on that webinar in early September.
That's an interesting one. I guess it would be a lease of some sort in that application.
Chris asks, would farms operating under limited companies or corporations or a business operating on personal acreages and farmyards, such as owner-operator trucker drivers with a shop or greenhouses, be included under this?
Heck yes. Are they taxpayers? Are they and for profit? Then yes. We're actually seeing a lot of really big interest from the agricultural sector in this element, and I've already been reached out to by some folks in the greenhouse industry asking for clarification. So, hey, definitely something to engage with.
Yusuf asks, which sites to follow for the ITC? And similarly, Allison asks for the resources and the links for the CRA and National Resource Canada guides.
So your best bet is type in the Clean Technology Investment Tax Credit plus Canada Revenue Agency website into Google or DuckDuckGo or whatever your preferred search engine is. It should come up there. It is, or if you're really wanting to look, it is underneath the Canada Revenue Agency websites, corporation income tax links, and the Clean Economy Investment Tax Credit. But that is where you're going to find all of your information. We do also have a publication on renewablessassociation.ca that will take you directly there in our press release on this. So
awesome. And I think from our side, as this will be posted on YouTube, we'll probably put the some links anyways into the description of the post.
Fantastic.
Neil asks, could you explain more about the labor requirements?
In terms of the labor, we're going to see a publication guide on the CRA. But what it is you have to admit it, there is a requirement that 10% of all labor be done by apprentices, and that is for your red seal labor. But then you also have a requirement to ensure that you are paying your workers on your site a clear amount of money that falls within what the federal government deems its prevailing wage. Those are linked into the latest agreements, and the federal government does actually have a comprehensive list of those agreements that it does publish through the Canada Revenue Agency's website. So again, I highly encourage you to, when you're looking at your own labor agreements, to use that as a reference benchmark there, and to ensure that any of your red sealed trade, you do have some apprentices. We do have some clarification questions out to the CRA on what they mean by job functions for 10%. So we're saying, okay, does having an apprentice sweep the floor count, or do they actually have to be involved in the actual wiring here when it comes to that? And how are we tracking time? So we're asking for a lot of clarification for them to publish on what that proper guidance is. And so again, stay tuned for our September webinar on that with the CRA.
John asks, is there a resource bank for all these incentives and possibly what's coming down the road?
Again, stay tuned to renewablessassociation.ca. For that, we try and post as much as we can with blogs and news releases on this. But if you're looking for just a step-by-step guide, there's nothing that can beat the CRA's Clean Technology Investment Tax Credit website. As boring as it can be, unfortunately, it's the best they've got.
Neil asks, there is half the labor for racking, ballast, and solar module installation. Are there any requirements for this labor?
Again, we really take a look. We are asking for clarification on what those are. If it is carried out by what is deemed a red sealed trade in your province, then yes. And the projects themselves do have a requirement for that red seal. But again, you can elect not to do that and just take the 20% and move that through your sales force.
Trisha asks, can you email the recording of this presentation to all the participants? And to answer that for you, Trisha, we will be emailing and alerting all the participants who joined us today on our live podcast once the full video has been uploaded onto YouTube. This video will contain all the resources as well that you may need to navigate the Clean Tech ITC. John asks, from a credibility perspective, is there a documentation or list of links that can be supplied to the end customer to explain best?
Again, I'm going back to the CRA's website that we worked to co-design with them and provide that guide. It was something we really worked with them early on to ensure that they have a clear step-by-step guide. In fact, it's literally just you click buttons to go through it, and then it gives you a bit of a guide. So that's your best first piece. We have looked at and are looking at how to make it a little bit more dynamic and a little bit easier, but for now, that is definitely your best bet.
John asked, are smart energy data monitoring and controls included in this?
There isn't any clear pieces, but they do designate power control systems as part of a claimable item. And they generally, under our interpretation, fall within the bounds of the systems that are allowable. But that is actually a question we have asked the CRA for a definition on, and are working with the Natural Resources Canada team to provide that technical piece to just say the yes. So again, stay tuned for September when that guidance will be fully issued.
Eric asks, how are the labor requirements verified?
So there is an audit process when they come back, and it is part of your filing. You do have to supply those attestations, and there will be a general account required. There is some questions on how they're going to enforce, but again, the CRA has already indicated they are staffing up their audit section, and they really want to make sure that there is compliance on this element. So just make sure your paperwork's in line.
Natalie asks, what are the main factors that businesses would not qualify for the standard 20%? If they do go for 30% with the added requirements, but do not meet those requirements post-audit, would they default to 20%?
So this is the interesting part. So the federal government will claw back any tax credit that they deem not needed. So you will face some clawback for any of that if it's not qualified. So, and in terms of attestation or anything like that, we don't have any standard forms for attestation. That is something we are thinking about doing. We want to, but if we do that, obviously want to work with a lawyer and a few other of those pieces. But it is something you want to just sort of cover yourself. Any subcontractors or anything like that, just making sure you have a document that says, I, so-and-so co, do declare that I'm up to date and complying with the prevailing wage requirements and all other requirements as set out under the Income Tax Act, section blah, 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 blah. Again, look to the CRA's website for that clear language there.
Neil asks, how does the government audit the project?
So again, they're going to be asking for documentation. There is also the element of, is the solar actually installed on the roof? I had one of the early questions we had with Finance Canada is they have a similar program called the Science Research and Economic Development Investment Tax Credit that goes for the development of intellectual property and other items. And we always had to disabuse some of the notion that, well, what happens if someone sells it out of the country? And I said, well, it's usually bolted onto a roof or a parking structure or a field. So you can always just go, look, is it there or is it not? But the auditing is largely paper-based. And they will be looking for your invoices, your employment records, and those elements there. And it is often best, to help your customers along by maybe providing those preemptively, along with that documentation you provide.
Is there some certain amount of time that a solar system has to be installed before it can be uninstalled?
10 years.
10 years.
Okay. 10 years. You can sell it on. So this is the interesting part. And this was, again, a fight with finance that very proud to say that CanREA did win is that they initially wanted it to be 25 years and no, you couldn't sell it at all. So now you can sell that system on, but there are two things that'll happen. One, you either are going to be clawed back if you're selling it to someone for parts or something like that. If you're selling it and hey, it's still a solar system or still a battery system, you're absolutely fine. If your customer is selling the building and that piece of infrastructure is still there, absolutely fine, not an issue, in so long as it's still being used as that issue. Where you will get clawback is if it's not being used anymore, if for some reason someone wants to move it on to another system. And also it's really important, used equipment does not currently qualify for the investment tax credits. So if the infrastructure itself or the equipment is already installed, not a worry on that building. So your customers can transfer those sort of building assets without worrying about it being clawed back. And so long as the next owner kind of wants to keep it.
Chris asks, will you be able to stack this ITC with the Clean Energy ITC coming?
No, there's no, you're going to have to elect. So it's, I want this one or I want this one. Now, my big question is, why would you choose a 5 to 15% investment tax credit over a 20 to 30? Generally, it's low. The lower ones are really going to be for your not-for-profit and your non-taxable customer base there.
Allison asks, where can we find the attestation forms required?
Again, there's no set form. It is sort of the guidance that we have asked. And it is something you're going to need to maybe work with an accountant and maybe a lawyer to look at something to develop it that would keep it in line and keep and keep yourselves covered. I keep using the term attestation form, but that's just largely what we're hearing from the Canada Revenue Agency as what they're going to be looking for as minimum requirements for paperwork.
John asks, with the new BC Hydro rebate programs, the programs can be stacked, but how do customers balance the 50% limit from an application/submission scenario?
That's going to be a difficult one, and really one I would definitely encourage someone to look at with their accountants. It is notable, and you're really going to have to look at it in a sense that any government grant or any other program will grind down your investment tax credit range. So you will see that 50% or 50 cent per kilowatt hour. You're going to actually have to look at and factor it because it's going to reduce the amount of investment tax credit you can claim there. But again, I would really work with an accountant on that one. Math isn't always my strong suit.
John asks, are there any existing concierge services or government programs that provide support to building owners during the start to finish solar installation process? If not, do you think such a service would be beneficial for an organization to offer to building owners?
There are a number of firms that are starting up programs like that, but it is still in its infancy. I do see that as an area of interest. There are a number of firms that are starting that compliance sort of program, but again, it's very much in its infancy. So there is opportunity.
J.A. asks, would a business be able to sell the equipment to an individual after about 3 to 5 years without being subject to a clawback?
No, unless it is being sold to another specific taxable corporation or taxable entity, you won't be able to sell that equipment on. And you'll have to face some clawback on it. It isn't like a full clawback. They prorate it based on use and time of ownership, but it will be subject. Y'all have to wait 10 years for that.
Does it matter? Oh, Natalie asks, does it matter who installs the equipment to meet the tax credit? Can customers install their own to qualify for the material costs, or will they require a register installer to meet their requirements for the 20%?
In so long as if it's the 20%, it's whatever is up to code in your area for installation. If they choose to do that, they can. It is whomever is eligible, in so long as it meets your building code requirements. But if you want that prevailing wage, there are rules, and the federal government really has been assertive that those rules must be respected.
Wesley asks, regarding recapture, if the ITC has been paid and then that asset is sold to an arm's length entity, the tax credit can be clawed back.
I assume you're asking if it can be clawed back. So the rule, and this is something that we really fought on, and I want to give kudos to Frankensolar for really bringing this to our attention and bringing it up as an issue, is if it's an arm length thing, is actually having the sale, if it's still meeting its intended use. So just say it's being sold, one asset is being owned by Corporation A, and they have an arm's length unit, Corporation B, it's in the same family. In so long as that asset's being used for the clean tech purposes, you're fine. If you sell that asset and then, I don't know, you want it used for garden ornamentation and not actually generating power, then you're not fine.
Let's do a few more questions here, and then we're going to start wrapping it up, Hazine.
Trisha asks, can you give an example of how and what type of business in Atlantic Canada can qualify to stack the Atlantic Canada tax credit and the ITC? You mentioned selling back to the grid disqualifies. Can there be net metering and qualify?
We're still working on guidance to see how that would apply in terms of the net metering process. And that is something we've asked the CRA debt for that definitive piece, because of course net metering is an important part of that end use case and part of a sale. But generally, the guidance they've given so far is that it has to be solely for internal consumption. So whomever, it could be any business that qualifies for both. But they've been quite clear on the nothing being exported to the grid, because we were looking at it for maybe developing grid scale projects, but the net metering is something they need to develop guidance on. But if I'm Fernando, the individual saying right now, I really don't think it would be something you want to sort of factor in there, if just so you don't fall on the outside of it. In fact, I would say we're in early days in some education pieces around net metering right now.
But as long as you'd install a zero export meter, it'd probably be fine?
Yeah, definitely. As long as it's a zero export meter, I think you would be fine.
Okay, so if you have a big bill, a big demand, and your solar portion's not going to cover it, probably makes sense at that point to install something like that if you're on the East Coast.
Definitely. And just a note, the Gaspésie in Quebec does count for the Atlantic Investment Tax Credit. So,
okay. To know.
Take a look.
Corey asks, can you confirm if the ITC needs to be declared as income in the following year? And if so, can we then apply the CCA for that portion?
So you, I can't speak to the CCA part, but you do need to declare it as income in the following year, as you would with any tax credit.
Our final question is from Allison, who asks, the documentation necessary in an audit regarding prevailing wage is an attestation saying that prevailing wage was paid. Is that correct?
Yes, but you're also going to need to have documentation. The CRA is probably going to want to see your payroll. And they're obviously, you can maybe, anonymize the names, as that tends to be. But you also have to remember, the CRA has access to literally all of your files already, and your payroll. So but it's always best to have on your end something to be prepared with.
Awesome. Well, thanks again, Fernando, for taking the time today to speak with us and our guests here today. And hope everyone enjoyed this format. It's a little bit different than what we've done in the past. Look forward to posting this on LinkedIn and then obviously our YouTube channel as well. Everyone that has listened, if you leave a comment on the LinkedIn post or a like, that's much appreciated. And again, Fernando, thank you very much, and thank you to the whole CanREA team for everything you guys do.
Thank you.
Thanks.